All right, so let's have a great conversation. And I bring in with me right here in the flesh, look at us, we're finally together in the same place. Kevin Green is with me, joining me, and we have a lot to cover, Kevin, but it's great to see you live here at the Schwab Impact Conference. And we kick it off. How are you doing this morning?
It's doing pretty good. Look, the market has recovered. If you looked at overnight trading, it was actually getting pretty dire out there, but we are seeing some buyers really try to step in. There was a liquidation event that did actually kind of take place here, with technology stocks actually selling off fairly aggressively overnight. You saw Nvidia break that $200 level. That was also very key. And then you're looking at a situation where SoftBank overseas saw a sell-off of over 10% at one point in time, but we are seeing a little bit of a recovery here, and we are trying to at least advance for now. Now, we have some economic data that definitely is going to take shape here and take hold. We actually have that hitting the tape right now, Nicole.
You have ISM services data?
Yes,
right?
We have ISM services actually coming out here. When you're looking at the ISM services prices, that actually did come in a little bit hotter than the street's expectations at 70 even. Street was looking for around 68, so it's a little bit hotter, getting a little bit hotter when you're looking at the prices component. That's not really great from the inflationary front, but when you're looking at new orders, that actually did move aggressively higher, up to 56.2. Street was looking for 51. Even, so you're actually seeing activity actually kicking up here a tad bit, and you are seeing yields moving a little bit higher, dollars moving a little bit higher here. So I would say it's a little bit of a mixed report when you're looking at the ISM services manufacturing data just in general, but overall we're still trying to hold up, at least for now, to start off today's session.
You know, Kevin, so many of the folks I speak with seem more concerned. They were originally more concerned about labor, and now they start to now talk about inflation again. And this shows this, right? I mean, this is what this shows. We'll talk about ADP in a moment, but now there seems to be a shift, and the Fed is going to have that Federal Open Market Committee deciding monetary policy, and they may be scratching their heads again.
They might be. I mean, if you look at the ADP report from this morning, I would say it's actually better than the street's expectations overall. We saw 42,000 jobs that were being added. Street was looking for around 32,000, and we did see a revision from last month. Now, last month obviously took the market by storm here. We saw a drawdown of 32,000 jobs for that ADP report, but we did see a revision back to the upside for a loss of 29,000 jobs, so some incremental improvement there. What is very interesting is that we also have to be mindful that the benchmark revisions are still being put into place for the ADP reports. That benchmark revision actually took around 43,000 jobs, and it's taking 43,000 jobs off that number every month. So if you kind of normalize it, we actually probably did a lot better than the street's expectations. Wage growth was a little bit stagnant month over month, but it does show that the labor market may not be cracking as much as we anticipated. This may cause a little bit of a discussion when it comes to the Fed. We'll see how they're going to react when it comes to December and the rate cut. But right now, you are starting to see that balance of inflation getting a little bit hotter, and employment maybe not as much of a concern, cause a little bit of, let's say, angst when it comes to the yield markets in general.
And it's such a shift in what's happening, because you have fewer in the immigration status, right? And then you have the labor force participation rate. You have the older folks retiring, companies, small businesses saying they're looking to hire. The large companies are doing more than the smaller companies. The tariffs and maybe other elements could be affecting the smaller companies. So there's a lot of shift going on that may take some time. That 42,000 number, what's the Goldilocks number, has been a conversation that folks are having pertaining to labor.
Yeah, I would agree with you. I mean, if you look at the labor market just in general, the estimation is around 1.5 million jobs being taken out because of the immigration policy in itself. Yeah. So you're right. We are used to seeing 100,000 or 110,000 jobs being added per month when you're looking at the labor market statistics, but that might actually change now to where 40,000 or 50 or even 60,000 is actually a sustainable number. We just do not know yet. We probably will not know until maybe June or July of next year. So there's a lot that's going on with the labor market just in general. Small businesses, we have to be mindful too. The majority of the hiring in the United States is from small businesses that actually have 250
yes.
jobs or employees or less. You are starting to see that falling off a tad bit, and that might be a little bit of a concern, but I don't know in this report if it's enough to really move the needle for the Fed to either cut or pause when it comes to December.
And look, we don't know exactly the long-term effects of this government shutdown. I mean, each time is different. I know the last one was 35 days, but we're in a different time. Yeah. What happens now?
And last one was a partial shutdown. We have to also remember that.
Oh,
some of the government was actually still funded. Yeah. This time it's a little bit different as well.
And then, I think about what's going on with the TSA. How will it affect the airlines? You're starting to hear some horrific possibilities. I don't know if it's I'm not in the business, but obviously it shows already that we may have some real glut when it comes to the holidays. Moving on, I wanted to talk about what we've been seeing in earnings season, which for the most part, we've been seeing more companies here beating the street, right? I mean, it's been over 80% success, right?
Yeah, so we are beating obviously the 5-year average when it comes to the beat rate for revenue as well as the adjusted earnings per share. And you're seeing guidance for the most part actually re-rate a little bit higher. Now, we have to be mindful. The bulk of that is coming from tech companies. So if you're looking at it on an equal weighted basis, we're probably not seeing as much of an earnings growth readjustment to the upside. But if you're looking at it market cap weighted, which is obviously what the market really kind of focuses on, you are seeing some improvement here. And that actually provides the backdrop for equities doing a little bit better. We know that as we see analysts re-rate their guidance higher and higher, that actually brings equity market valuations a little bit higher as well. And so we are seeing some really decent earnings. The Mag 7 is done. I think NVIDIA is the only one that's still on deck. That's the one that's a little bit of a concern. If you are a trader, you probably want to see NVIDIA pull back a little bit leading into that report to kind of give you a little bit of room to move to the upside, rather than NVIDIA trading at all-time highs, reporting earnings when it's pretty much the most transparent company that is out there and has been announcing deals almost every week, every 2 weeks.
Before I let you go, Bitcoin, can we just touch on that?
Yeah.
Because everybody's been seeing, obviously, it's been a risk-off environment the last 24 hours. Now what?
Now, so you look at Bitcoin, look at it from a technical standpoint. 100,000 is obviously a psychological level. It is in a bull flag pattern, meaning it is consolidating. It's pulling back a tad bit. But this morning, you are seeing buyers really stepping in. They're hitting the key areas of support. You are starting to see other cryptocurrencies as well. Ethereum, Ripple, XRP, if you will, starting to move a little bit higher. I think there's some dip buyers stepping in here. And if we do see Bitcoin actually continuing to advance, let's say recapturing 110,000, Nicole, that could also be a risk on sentiment indicator for the broader market as well. So I would say take this technically first, and then if you see any major breakdown, and you're talking about 80,000, 85,000 on Bitcoin, I would get a lot more concerned about the market. Treat this as a traditional pullback for now.
All right, Kevin Green, it's great to see you get a lot more of Kevin's analysis over the next 2 days here from the Colorado Convention Center. Thank you, Kevin.